This is one of the series video that I will make for Smart Money Trading Room. This video are exclusive for Trading Room only, right? And as I mentioned, to trade with the fundamental is great, but it is not. It is something that not easily able to follow, especially if you don't have the time to and to read reports, economic reports, and news, right? So this new way of trading, is very similar to our DHL, where we do not put so much focus on the fundamental. Instead, we put a lot on technical, and we try not to trade when there is a market moving news. Okay, market moving news, example, non-farm payroll news, or example, interest rate related news. Okay, we try to avoid those news events, right? So so you can see that it's very similar to the DHL. Now, the difference with DHL and this smart money trading concept is that DHL is specially designed for intraday. Our focus time frame is 1 hour. Okay, and of course, we look at the 4-hour time frame for some guidance. But for this smart money concept, we are using multiple time frames, right? That's the difference between the DHL and this. We are using multiple time frame, using as high as a monthly time frame to down to weekly time frame, daily time frame, 8 hours time frame, 4 hours time frame, 1 hour time frame, and maybe even 15 minutes time frame for entry time frame, right? So as a trader, you are able to pick and choose what time frame that actually suit your working schedule. Okay, so that is a flexibility there. And of course, as I mentioned, that we in this strategy, we'll try to focus a lot on TA, technical analysis. Now, since we are focused so much on technical analysis, of course, you need to have some fundamental knowledge that definitely will help. For example, you must know when is the risk on, when is the risk off, during the environment of risk on, which are the currency we can buy and sell, and so for risk off, right? So these are all very, very common and basic that you need to understand, right? Other than that, I think this strategy is perfect for people who just like to trade based on what they see on the charts, right? And the strength about this strategy is we try to align our trading opportunity, right, in the lower time frame to be with the higher time frame, meaning to say that we try to use multiple time frame analysis, right? We use maybe, let's say, monthly, weekly, daily as our higher time frame, right? Now, and we use this higher time frame for market buyers. Example, is a market bullish or is a market bearish? Now, in the bullish market, we'll be looking for buy. Now, in the bearish market, we'll be looking for sell. Then our opportunity, we will try to align with the higher time frame trend. All right. So if the higher time frame trend is all bullish, naturally, I'm looking for long rather than short. But it doesn't mean that you cannot short. Important thing is you must know when to get out if you are trading against a higher time frame trend, right? So you can that again, there's a flexibility there. You need to understand when you should get out if you are trading against the trend. Now, if you want to learn other, the concept is all in this smart money forex trading room, right? Basic principle that you need to watch and understand before you follow with this video. The series of video that I'm making for you guys. All right. So you can see that this is our Moodle orderflowacademy.com platform. Now you should go to this trading room, smart money trading concept. Go through all these video, the trading concepts, assuming that you already, right? Assume that you have already you have already gone through all the video that I shared with you. Now you go to your chart. Now the first thing first, we need to know what is your higher time frame, right? To many people, higher time frame can mean different things, right? Some people might take monthly, weekly as your higher time frame, or daily as your higher time frame. Some people might take a daily 4-hourly as your higher time frame and trade on the intraday, right? So it depends on what kind of trader you are. If you are a swing trader, naturally you want to fall back on the higher time frame, right? So now what we are going to do is we are going to go up to the higher time frame. Like you can see, this is a monthly time frame. Okay. Now in the monthly time frame, the first thing what we're going to do is identify trend. Now there are different ways that we can identify trend. Some people use moving average, which we don't use. Now typically I like to use this. I like to use example, right? If price make a high, make a low, make a higher high, make a higher low, make a higher high, make a higher low, make a higher high, and make a lower high, right? So this tells me that market was in a uptrend. You can see this is a high, this is a low, higher high, higher low, higher high, higher low, higher high. We can see that this is uptrend. All right. Now, then we can see price start to move lower. We make a lower low, lower than this low. So we say this uptrend is over. Technically, we are potentially going to a maybe in a ranging market, or when the price pull back, make another lower high, make another lower low, then we confirm that we are now in a downtrend, right? So we basically use this this is what we call market structure. So basically we're using this market structure to determine whether it is in an uptrend or it is in a downtrend. Okay, so this is very important because in a uptrend market, we like to look for long. In a downtrend market, we like to look to short. Now, the other thing which is important is, now you can see that this is a low. This is a higher low than this low. This is a higher low than this low. This is a higher low than this low. Now, this is a higher low. The reason is because the price actually make a high. This high is higher than this high on the left. So we call this higher high. Okay. So we say that this low is a validated higher low because it actually break this high. It break this high and make a higher high. So this is a validated higher. It means that in the future, when the price retrace back, this is likely to be a very strong area where price might potentially push the price back up. Okay. Now, what if we see another situation where like this? Okay, like this. Okay, so we have a low, higher low. Now this looks like it's a higher low because this low is higher than this low, but this is not a validated higher low. Because why it is not a validated higher low? Because simply because it has not taken out this high yet. Right? The current price is here. It is not yet. So we say that this is a potential higher low. Now, if this is an unvalidated higher low, or we call potential higher low, when the price start moving lower, usually you will not respect this low and you will go for the validated higher low, which is this one. Why this is validated higher low? Because the price actually make a high higher than this high, right? So this is a higher high. So we call this price actually break this structure and make a higher high. So this is a validated higher low. So if this is a validated high low, when the price reverse down, it tend to respect this validated higher low and not respect this unvalidated higher low. So we will be looking for this area for potential long rather than this, right? So this is validation. It's quite easy to understand, right? So basically this is how we determine whether it's uptrend or downtrend. Now, the other thing which is also very important is you can see that we are now in a monthly time frame. Now, if I ask you what is the trend, well, if you based on what I just shared with you, based on that concept, higher high, higher low, you can see that we have a high, we have a low, we have a higher high, we have a potential higher low. Again, I say that potential. Yeah? We have a low, we have a high, we have a higher high. So this is validated. This one is a potential higher low. Potential only. Right? Why? Because it did not make a high higher than this high yet. So when the price come back, this can potentially be taken out. But of course, this is a money time frame. And for the price to come down, it will take a long time. Okay, or it might even might not even come here, right? So anyway, based on this concept, we say that the price took out this high, it break this structure, right? It break this market structure. and make a higher high. Okay, it means that it is bullish. It means that the market want to push up higher. Okay, but for whatever price action over here, this belongs to a lower time frame trend. But this is the overall trend because this is the high, this is the low. Okay. Now, we will only say that this time frame is in a downtrend when the validated low is being taken out. It means that in future, if we see the price start moving lower and take out this validated low, then we say that this is the downtrend. But for the time being, right, we consider this trend, this time frame is bullish because why is bullish? Because this high and this low is what contain all the activities. Whatever happened here belongs to a different time frame trend. Whatever happened here. Okay, so I hope that is clear. Okay, so now in the money time frame, we are bullish. Now, so now we go down, we can go a little bit this area here. Now we examine what is the market doing. Well, in the lower time frame than monthly, we can see the price actually making a lower high, lower high, lower low, lower high, lower low. So clearly, this part, it is in a bearish market. Then we see the price start moving higher. Moving higher, take out this last validated lower high. This is a lower high. Then this high, right? This is validated. So the price actually took out this lower high. So this downtrend is no longer downtrend. We are now back to potential sideways or uptrend, right? So this, we are no longer in the downtrend. So now we look at this area. We make a high. This is a low. We make a higher low. Why this is a higher low? Because the price make a high higher than this side. So this is a higher low. This is a validated higher low, right? So if this is a validated higher low, so when the price come back, it tend to respect this level. So you can see the price came back, it respect, it pushed back up one more time, right? So that's how you can see the effect, the power of these validations, right? So now if you just look at this area, what is the price doing right now, right? Anybody who look at this, we know that, well, it is in the range, right? True enough, it's in the range, all right? But when we go down a lower time frame, right, you're trading this area to this area. This could be a downtrend in lower time frame, and from here to here, this is uptrend. From here to here, this is a downtrend in the lower time frame. But in this time frame, it is in the no directions. Okay, so we know that in the money time frame, we can say that we are bullish. Okay, we can just say that we are bullish. So now what we're going to do is we go down to weekly time frame. So what's the weekly time frame doing? Well, weekly and the monthly, they are not much of different, right? We can see that we are basically in a ranging market, right? And if you take a look at this area here, we make a high higher than this high. So this is a higher high. Okay, we have break a structure this high, so it's a higher high. Now, whenever we see the price break a structure, we know that the intention is to go even higher, right? But before it go higher, the price can go what it want to do. It can just go like this, like this, come and test, and eventually you want to go higher. That's why you want to make a higher high. All right. So we know that, well, you make a higher high, it means that the price want to go higher, right? So this is a low, this is a high. This is another different time frame direction. So what is the trend? Well, the trend is also bullish. So let's say that this is a weekly time frame. It's also bullish. So we say just now monthly bullish, weekly also bullish. All right. So now we take a look at this area here. Price make a high, it break this structure, right? Then you might say that, Benny, we are in a downtrend. Yes, you are right. From here to here, this data point, we are in a downtrend. But if we consider this whole entire data point, bigger time frame than this, right? We are bullish. Whatever happened here belongs to a lower time frame trend. All right, just like I mentioned just now, in the money time frame, right? Just now I say that the high is here, Low is here, and it break this high and make a higher high, right? So long as the monthly time frame is concerned, you can see that the price can do what it wants. It is still contained within this high and low. So monthly is bullish. So whatever happened here belongs to another time frame trend, which is weekly, right? So what I show you just now when I go to weekly time frame is we focus on this area, right? Weekly, this is the high. Okay, this is a weekly low. We have a break of structure here. So we say that weekly is bullish. So now we have both monthly and weekly is bullish. Right, how to draw this? Okay, weekly also bullish, monthly also bullish. Okay, so yeah, monthly also bullish, weekly also bullish. So whatever happened here, yeah, it belongs to another time frame trend. Whatever happened here, you see all this price action contained within this high and low. It belongs to another different time frame trend, right? So in another different time frame trend, which is a lower time frame, we can see the price was in a range, then it break this trading range. So we can say that, well, it is in a bearish, right? It is bearish. And the price make a low here, price make a lower low here. This is a lower low than this low, right? A lower low. That's why we say that this is bearish. But if you focus on this area belongs to another different time frame trend. This time frame, the blue box here, it is bearish. But over here looks like there's something changing, right? Why something is changing? Well, if we zoom in a little bit more, we can see that this is a lower low, which I showed just now, lower low. But here, we can see the price now start to change. We have a low, we have a higher low, we have another higher low. We have a high, with a higher high. So it looks like in the lower time frame, the trend is changing from a bearish to bullish, all right, which align with the higher time frame, monthly and weekly, which are bullish. So whichever time frame is this over here, this is bullish. This is still bearish. All right. This is in this subject, I want to focus on understand the direction and trend, right? Because this is one common subject or topics that where a lot of people get confused, right? They say that this time frame is bullish, that time frame is bearish. So what should I do? All right. We try to align our trading with the higher time frame directions, right? So let's go down to daily and see what happened. Now in daily, what do we see? Well, it was in a bullish trend. It was in a bearish trend. We can see that, right? We can see the bearish trend. Now you can see that this low, this is a lower low, lower than this low, right? So it is bearish. We already confirmed. But over here, in the lower time frame, we can see the price start to move curve out here. So this is in a bullish trend. Now remember, our higher time frame is bullish, and we should be looking for long, right? Because since we do not factor into the fundamental analysis, so if we're going to trade just purely based on technical analysis, we want to make sure we are trading aligned with the higher time frame trend, and we want to make sure the lower time frame and the higher time frame trend are in line. That will give us the optimum maximum risk reward and higher probability. Okay, so let's focus on this area. You can see right now we have a low, a high, a low, a high. You break the structure, make another low high. Okay, so this is basically a stop hunting. The price goes up. So now we are in a bullish trend, right? This bullish trend. So if this is a bullish trend, thinking that this video, I only want to focus on identify the trend, right? And once we know that, once we know our trend, we know we want to buy, we can see we are in the bullish trend. Then the current price is here, then we also know that the price is moved by liquidity, right? Institution trader, if they want to buy something, they need liquidity, they need counterparty order, right? So in order to find the liquidity, right, all the liquidity are located at the swing high and the swing low, right? Example, all these swing high, swing high, swing high, all these are above are all the stop loss, and the stop loss is actually liquidity, right? So these are all the stop loss above, right? People who sell, they expect the price to go down, so when the price come and visit, they sell. If they sell, their stop loss is actually a buy order. Okay, so we call this a buy side liquidity. Okay, this is called buy side liquidity because the order is buy order. Okay, now on the swing low, we also have a lot of stop loss. See, but all these stop loss are sell order. Why sell order? Because traders who are bullish, they buy at this low. When the price come back here, they buy. When the price come back here, they buy. They buy at the support, and they put their stop loss below the swing low. So if they buy at the support, their stop loss is actually a sell order. All right. So we call this stop loss sell side liquidity. Okay. So this is a terminology we're going to use from now on. Buy side liquidity, sell side liquidity. Okay, understand that. So we know that when the bank want to move the market, they need liquidity. So I like from this chart alone on a daily time frame, okay, I can see that it's already turned bullish. So I would like to look for a long, right, based on the higher time frame trend. But if I in between this time frame and there is a bearish, you can see here is bearish from here to here to here to here to here to here. This is bearish, but here is bullish. Okay, so this is bullish. Okay, so now if this is bullish, obviously we can look to long, right? And but because that this is belongs to a lower time frame, because you only capture this amount of data point, definitely this belongs to a lower time frame, bullish trend, right? Now this trend cannot compare this amount of data point. This belongs to the higher time frame trend. Higher time frame is bearish. Of course, higher than this is bullish, right? But now we're talking about the immediate to this time frame is this. So this time frame, low time frame is bullish, but the immediate higher time frame is bearish. Okay, so we need to pay attention. You can look for long trade and do a counter trend trade, but you must know when to get out. Now, when to get out? Okay, we take a look at this. Okay, if we go down to plot all the swing point, yeah, here to here, here to here, and then all this belongs to a lower time frame trend. It's okay. We can just encompass here, okay, or here. Okay, all this whole thing here belongs between this and this, right? Here is lower low. This high is lower than this high, right? See? Then this one, then this one. Okay, that's where it start to change. This is the point where it start to change, right? So now, the price make a lower low here. Until this point, we are still bearish. But once the price rally up, it make a higher low. We can say that this time frame is bullish. And if you want to look for long, you can long. You can go long. This is daily time frame. Of course, if you go down to the lower time frame, like example H4, H1 or 15 minutes time frame, obviously you're going to pick up some long opportunity here, make money. But as you go long and long, right, and you can see the price come to this area, make a high, and it start turning back down, right? So when I say that you can do counter trend trade, this is what I meant. You can look for long trade so long as the price has not arrived the higher time frame lower high. Okay, now this is a higher time frame lower high. This is a higher time frame than this time frame, right? So this is a higher time lower high. You can see that, right? So this is the reason why this price is get rejected, right? So you can go long here, go long here, go long here, but the moment you come arrive the higher time frame supply, which is a validated lower high, lower than this high, you need to get out, right? This is not validated. This looks like a lower high, but you see what happened to the low. The low is actually a higher low. It did not make a low than this. That's why I say that this price move up, it did not respect this lower high. It go and respect this legit lower high, and you return down. Okay, so this is a very important concept, right? So we need to plot the immediate higher time frame or even higher than this time frame. Where are the valid or legit lower high or higher low? Because those are the turning point. When the lower time frame come to this area, it tend to turn around. Because we usually, as a trader, we all say that, okay, let's say example, right? Why this is so important is, let's say example, we manage to get long at this level, our stop loss here, and we start to go long. A lot of people say, Benny, where should I take profit? Where can I expect the price to reverse, or where, and then I can take profit? Well, where you should take profit? You should take profit when the price is expected to reverse. So where is the price expected to reverse? When the price arrive the higher time frame lower high. Which example this is a very, very good example. Can you see now? Right? This is a lower high. So price come to this area, it get rejected, it turn back down. So if you go long here and you never get out and take profit, you can see that all your money that you make return to the market. Okay, so this is a very, very important concept that we need to understand, right? Higher time frame always more important than the lower time frame. We can do counter trend trade, right? But you must know when to get out from the trade, because the moment the price arrive the legit lower high, if you long, or legit higher low, if you short, you need to take a profit. Otherwise, you return all the profit that you make. So can we do counter trend trade? Yes, you can. Video is just limit to identify the trend, knowing that the higher time frame trend is more important than the lower time frame trend, and also knowing when you should expect the price to U-turn. You can anticipate when the price to U-turn if you can mark all the market structure. Okay, so I hope this video helps. See you in the next video.